Good day, everyone. Welcome to our confidential report for October month. I'm going to start in America, as we often do, because what happens there tends to affect every place in the world and every stock market in the world. The big news, of course, is the Federal Reserve Bank, cut interest rates by a further 0.25%. They're obviously still a bit concerned about a recession coming through in America. I think that's very unlikely, but they seem to be concerned. In any event, they are very dovish, as we say, and Europe also adopted a very dovish stance and resumed with its quantitative easing for more or less the same reason. They want to avoid going into a recession. Obviously, the thing that is concerning them most is the trade war with China, which was initiated by Donald Trump, and nobody quite knows how serious that is going to be, so they don't want to take any chances. This, of course, the trade war has the impact of switching sentiment to risk off, from risk on to risk off. So overseas investors are currently in a risk off state, which means that they are withdrawing funds from emerging markets and investing in more secure, safer investments like US Treasury bills, and to some extent gold, of course. But Wall Street over the last 6 or 7 months, well, since the beginning of this year, has had the biggest gains that it's had for the last 2 decades. It's up 19% so far this year, and that's the best gain for the last 2 decades. But the market is very political. It's not really responding so much to economic developments as it's responding to what Mr. Trump decides to tweet today. And those are very short-term effects. The underlying effect is, of course, the growth of the U.S. economy, which continues to be very strong. And obviously, we're now heading into the third quarter, and we will start to see quite soon the earnings reports from the S&P 500 companies for the third quarter. We're also, there is quite a high expectation that there will be 2 more rate cuts before the end of this year. I'm not so sure that there will be, I think, but at least one seems likely. What is interesting is that over the third quarter, 16 central banks throughout the world cut their interest rates. And it's expected that in the fourth quarter, 22 will cut their interest rates. So the general move worldwide is towards monetary stimulation of the world economy, obviously to compensate for this trade war situation. The one thing I would really draw your attention to is the fact that it is now the 1st of October. And all investors know that October is a very difficult month for the share market. All the major crashes, including the 1929 crash and the 1987 crash, began in October. So you can expect the bears to come out in force and to have lots of doom and gloom stories. However, our view is that the S&P 500 will probably break to a new high, possibly after the end of October. So we're not bearish. At the worst, we're expecting a continuation of the current correction, and more likely, we think that there will be a new record high sometime in the next month or so. If you look at the chart here, I'm just going to point with the mouse on the screen. Here you can see the previous cycle low at 2744, which occurred on the 3rd of June. And then that was followed by the all-time record high, which is up here on the 26th of July at 3025. So this is the S&P 500, of course. Then that was followed by Donald Trump's China trade war, which brought about the next correction. The market came down heavily to support at 2840, and then began a period of backing and filling, which you can see here, and made a pretty classical flag formation with resistance at 2932 and support at 2840. It broke up out of that flag formation quite convincingly and has moved up towards this top here again, but failed to reach that top and has now drifted back down towards this new trend line, which I've drawn on here. What you can see, though, is that the previous resistance line at 2932 has now become a support line. So the market came down, found that support line, and moved up. Actually, this line is just fractionally too high. It should be there. So now you can see more clearly. So that day there, which was the 27th of September, the market came down and touched on this resistance line, which now became a support line. And now we're starting to trend up off that support line. So in our view, we are looking at an upside breakout almost certainly before the end of the year and probably sometime in the next month. Obviously, that will take other markets up with it. All right, let's turn our attention to the South African economy. Obviously, that is where we all are, and that concerns us deeply. The focus now is on the mini budget, which Tito Mboweni will deliver at the end of October. He's got a hell of a job there, managing the government debt and trying to balance everything. Everybody is watching what he's doing to see if there's any signs of genuine improvement or return to normality in the South African economy. One of his biggest problems, of course, is that SARS has once again announced that collections will probably be short of the budget level possibly by as much as 50 billion rand. That's not going to help him in his deliberations, I'm quite sure. But the main reason for that, of course, is that growth is coming in at about 0.6% instead of the 1.5% budgeted in February. A large chunk of that is due to the money that's been necessary to refinance Eskom. Obviously, we had a terrible first quarter mainly because of the strike at Sibanye. And then the second quarter was a rebound. And obviously, that meant that we didn't enter a technical recession. But we still have growth of only 0.6%. So that is a concern. The FNB Chief Executive Officer, Alan Pullinger, said the fiscus, in other words, the Treasury, has an expenditure problem. What he means by that is that they shouldn't be reacting to this situation by increasing taxes. He says they've got enough money. Their problem is an expenditure problem. They need to start cutting costs. Obviously, that begins with the size of the civil service. And also, equally obviously, it begins with privatization. There are some 200 state-owned enterprises in South Africa. And in our view, the government should be aggressively selling those. Some of them are profitable and will fetch a good price. The money that they derive from that can be used to reduce the government debt. At the same time, they will be stimulating the private sector by moving more assets into the private sector and out of government hands. The problem, of course, is that they battle to do this because of the unions. Tito Mboweni is the only minister who's been brave enough to even say the word privatization. So there's a bit of a political problem here with this idea of privatization, but we believe that sooner or later, even if they don't call it that, it's what they're going to end up doing sooner or later. It was good to find the Moody's lead analyst saying that no downgrade was envisaged for South Africa in the next 12 to 18 months. Moody's is the only remaining international ratings agency which has South Africa on an investment grade, so this was definitely good news for us. And one of the factors there is that most of South Africa's debt is long dated, in other words, not due for repayment soon, and it's also rand denominated, which means it's not vulnerable to changes in the value of the rand against the US dollar or the pound or whatever. What is interesting is that the government debt has increased to 58.3% of GDP, which is quite a jump up from the 56.2% estimated in the February budget. I also saw that liquidations were up 25% this year from last year. And in the 7 months so far this year, they're up 13.7%. Obviously, most of these liquidations are small and medium-sized businesses, and they are the ones who create the jobs in the economy. A lot of them have been knocked out by late payments from both the government and the municipalities, which is really unnecessary and a disaster. I also noticed that there was an agreement between NUMSA, the National Union of Metal Workers of South Africa, and the auto manufacturers, who have come to an agreement. In the first year, wages are going to go up 9% and 7% for the following 2 years. And obviously the auto manufacturers include people like Toyota, Ford, Nissan, Mercedes, and so on. And between them, they manufacture about 600,000 vehicles per annum. More than half of those are exported. And these companies, these overseas companies, are looking to invest about 40 billion rand in various manufacturing upgrades over the next year or so. They employ altogether 90,000 people directly, and indirectly about 380,000 people. So they're very, very important. And the fact that NUMSA has come to an agreement with them, and I believe that this is the third time that they have settled with in the third negotiation that they have settled without a strike consecutively. So that is a good sign indeed. One of the best pieces of news that came out over the last month is that the government was able to raise $5 billion, which is about 75 billion rand, by selling Eurobonds in the last month. This issue of Eurobonds was 3 times oversubscribed, and that shows that there's a massive demand for South African paper. If you're feeling depressed, if you think South Africa is clearly going down the tubes, then you should consider that offshore investors don't hold the same view. They are quite happy to invest heavily into South African paper at this time, and that's a very good piece of news for us. I'd like to turn my attention now to Eskom, because Eskom seems to be at the center of most of the problems in this country right at the moment. Obviously, it's got a huge debt and profitability crisis, and it's central to South Africa's economy. Ramaphosa and Pravin Gordhan have changed the top management, but in our view, the corruption runs down at the lowest levels of Eskom. There is a continuous and consistent theft of power in the squatter camps in South Africa. 5.4 million squatters live in South Africa, and they have unlimited power, which is basically being stolen from Eskom. If you drive through any squatter camp, you'll see a spiderweb of lines, which all end up at an Eskom junction box or transformer. These things are set up by current or previous Eskom employees, organizing illegal connections from the nearest Eskom transformer to a junction box and then to squatters' houses. The junction boxes and cabling are often stolen from Eskom, and the people who are doing it are either current or previous Eskom employees. The going rate in the squatter camp, if you want electricity in your shack, you pay 650 rand in the first month, and thereafter 200 rand a month, irrespective of how much power you use. In other words, it's completely unlimited. In the winter, many squatter families will run a 2 kilowatt fan heater right throughout the night in order to keep their shack warm. Eskom, of course, does come around and disconnects these illegal connections. But of course, 1 hour later, they are back up and running, and power is again being stolen. The people in the houses near to the squatter camps have cottoned on to this, and they've also started making illegal connections and stealing power from Eskom. So Eskom has less and less paying customers, and they are and more people, and they are paying more and more money to subsidize a countrywide squatter camp industry. As I said, there are roughly 5.4 million squatters in South Africa. All have now got access to power, but Eskom is dying, and with it, the South African economy. So something must be done about this. It is pointless to change the top management if they do not deal with the corruption at the lowest levels. All right, let's now turn our attention to the rand. Just going to get the chart up on the screen here. Obviously, the rand has been under some pressure. Right, I'm going to put a bit more data onto the screen. Right, here you can see the pattern of the rand over the last 5 years, and you can see that from the time that Ramaphosa, the Ramaphoria started to dissipate, the rand has been weakening. And the trend is fairly straightforward. It's just been getting worse and worse over this time. There does appear to be some support up here at about 15 Rand 40, somewhere around here. Maybe a little lower than that, but the point is that the trend is not good. If you look at this trend up here, this is not good. A lot of this, of course, has been caused by the international move towards risk off. People withdrawing their assets from South Africa, taking cash out of emerging markets generally, and that's having a negative impact on the rand. But it is possible now to see the sheer cost of the Zuma period and how it's being paid by South Africans all the time through the weakness and the debasement of their currency. Of course, risk off is a big factor. That is caused by Trump's trade war. And now, of course, added to that is the possibility that Trump will be impeached. That's not helping the markets either. The rand has weakened to above 15 rand to the US dollar. And that, of course, impacts the inflation rate through the petrol price. All eyes will be on Tito Mbowene's budget at the end of October. The chart shows that support at about 15 rand 40, but this may well be broken. So I'm not very optimistic about the rand at this stage. Now I'm going to move to a general section, just a few general points that I want to make, I think 4 of them. The first one is that the crime statistics came out and they look very bad. South Africa is recording 57.5 murders on average per day. That's roughly the same number of murders as the UK experiences in a full year. And their population is slightly bigger than ours. Of course, this has got to do a lot with the standard of police work in this country and the culture of bribery, which has become endemic. The National Prosecuting Authority and the judiciary are solid, but they are heavily overworked. And the NPA particularly has been hollowed out during the Zuma period. But obviously, a high crime rate has a direct impact on foreign direct investment into the economy. So it's something we need to try and address. The second point I want to make under this general heading is a point about microlending. Low-income consumers in South Africa are being persuaded to borrow too much by microlenders. Originally, unsecured lending or microlending was the province of African Bank Investments Limited, ABLE, which of course went bust. And then obviously after they went bust, it was what Kappa Tech did. That's how they launched their business. And the big banks got involved in unsecured lending to quite a large extent. But Kappa Tech and the big banks have moved up the income scale, addressing more affluent consumers and not dealing so much with at the bottom of the market. And this has created a gap at the bottom of the market. Differential Capital, which is an asset management company, made this observation. Financial inclusion through microcredit has become financial enslavement through debt traps. And a lot of our poorest people in the country are basically getting trapped in debt in a situation where as much as half or more than half of their income is being used just to service that debt. Okay, Transnet, a bit of good news here. Transnet will move this year 15 million tons of manganese to the ports. This is up from 5 million in the previous years. And this increase in transportation, they brought it in at about 10% of the budget, which is a massive achievement. It's an example to the other state-owned enterprises to run their businesses efficiently. And of course, it retains and creates thousands of jobs in the manganese industry in this country. And then, of course, another thing that's come up, the fourth thing that I've got here under general, is the shift towards prescribed assets. This is being talked about a lot in the ANC, but it's just a bad idea. Pension funds already invest in a lot of government structural activities, but they're not forced to do so. So obviously they evaluate those activities, decide whether they are profitable, whether they're a good investment, and then they invest or they don't invest. But if you prescribe assets, you are now forcing those pension funds to invest in things that they probably wouldn't invest in otherwise. So this is just a mechanism to have bad projects financed. And obviously the classic one there is Eskom. If we use prescribed assets to finance Eskom, we are putting money into something that the average institution would definitely not invest in, because the business model, the business plan is just not effective. It's estimated that if prescribed assets are introduced, it will result in a flight of capital of about 2 trillion rand from South Africa. So that's something to bear in mind as well. All right, I want to just talk a little bit about companies now. And I want to begin that with just a little bit of a course, if you like, or education on how to go about doing some research. All right, so I've chosen as my example here this company, Rolf's. But I want to just draw your attention on your software. Under the heading News here, you have the Stock Exchange News Service. And if you click on that, you get a window here which opens up and shows you all the different stock exchange, the SENS announcements by various different companies. And you can see here there's Woolworths and Truworths and Grindrod and Cognition and so on. And I went through all of this. This is all on the 30th of September. So this is right up to date. And I just looked for this one here. I found this one. And what this says is on the 30th of September, Rolf's produced summarized consolidated financial results for the year ended 30th of June 2019. So now you go to from there, once you've found the share that you're interested in by scanning through the SENS messages, you then go back, close this, go into the share itself. So now you can see we're in Rolf's. And what I want to do is to open the SENS messages from here. So I click there, and that will bring me up all the SENS messages for Rolf's in date order. So here you can see those summarized consolidated financial results. You can click on that and you open up those results, and then you can see it's the consolidated financial results for the year ended 30th of June. It's for Rolf's Holdings. And they give you the key features. Turnover or revenue is up by 7.8% to roughly 1.5 billion. Headline earnings per share increased by 95%. They virtually doubled to 23 cents per share, up from 12.2 cents in the previous year. And so you go on. And you can read about the company. They normally give you a little bit of a summary of what the business is. Rolf's is a leading black empowered industry compliant supplier of agricultural, food, industrial, water, chemical management solutions for local and international markets. And then when you've read through this, you'll see here at the bottom, it says this is a short form announcement. So the full announcement you can find here. If you open this, if you just highlight that with your mouse and then do Control-C. Sorry, I've lost it. Let me try that again. So you highlight that with your mouse, then you press Control-C, then you go into your browser and press Control-V, and it brings up what you saved, and you click on this, and it gives you the financial statements of Rolf's directly from the JSE. So now you can go down here and you can see these are the consolidated financial statements for the year ended 30th of June. And then they give you the key features. Revenue is up by 7.8%. Headline earnings up by 95%. Cash generated from operations increased by nearly 30%. And the debt has been reduced from by 26.7 million rand to 165.1. So all of these things are positive. And then you've got the commentary. And you can go through, you can see that the company is involved in 5 different areas: agriculture, food chemicals, industrial chemicals, color, which is organic and inorganic additives, and water. So it's involved in those 5 areas, and it gives you a detailed analysis of what happened in the business over the year to the end, which ended on the 30th of June. I just went through that because I want you to see how this type of analysis is done. So when I write opinions for ShareFriend, I'm going through exactly this process. I'm opening the SENS message. I'm looking for anything that could be of interest. And then I'm going back into that particular share and opening its SENS message, whether it's their financials or their trading statement or whatever, and then updating the opinion accordingly. All right, now I just want to look at the JSE Property Index. Sorry, I think I pressed the wrong keys there. JSE, it's called the SAPY, the South African Property Index. I didn't get it. Yeah, there it is. All right, and close that and close all indicators. And let's go to a line chart. All right, what I want to draw your attention to here is that right at the moment, this particular index, the South African Property Index, is sitting on a dividend yield of 9.3%. That's amazing. If we go back, let's go back to a candle chart. And if I'm going to put a bit more data on the screen, you can see the tremendous fall in property shares since basically since 2017. A lot of this is due to the resilient collapse, but more of it is due to just bad results. And now you can see the index is right down here, and it looks to me very cheap. I mean, you've got to bear in mind that the JSE overall index is trading on a dividend yield of 3.87. So for one sector, property, to be on a dividend yield of 9.2 or 9.3% is ridiculous, I think. And I think it looks very cheap. So what you should do is look through the property shares and possibly choose those which have an exposure overseas, where they've got some or all of their portfolio of properties in Europe, say, and that obviously gives you a rand hedge component. So it's just something for you to look at and to consider. All right, now I'd like to talk about one of those property shares, not the one that I think you should buy, but one share. I've got the wrong share here again. I think, yes, I have. Sorry. Let's go there. The share I want is Accelerate Property Fund. This company has been revamping the Four Ways Mall. So the Four Ways Mall is now opened in its new form. It's 178,000 square meters, and it's going to go up to 200,000 square meters once the new Leroy Marvin store is opened there. Accelerate is doing this in partnership with Azra Part, who've got 50% of the deal. The objective, obviously, is for them, and they've said this, is for that center to compete with Sandton. The problem it has, of course, is that there's no Gauteng there. So Gauteng, the area of Gauteng, is oversupplied with shopping malls. And there's a growing trend towards online shopping. It's still very small in South Africa, but I understand it's approaching 2% now. The Four Ways Mall is very impressive. If you go there, you'll see all the right retail tenants are there. Some overseas people that you haven't seen before. Very, very posh and exciting. But it just gives me the feeling that it's not quite finished yet. They haven't quite finished a lot of the elements of it. And it's really a stretch to see it competing with Sandton anytime soon. The cost of this revamp has been 10 billion rand. Roughly 10 billion rand. And that's going to take decades to recover. And you can see here, if I just put a bit more data on the screen, you can see here that investors and shareholders are also not particularly convinced about this development at Four Ways Mall. Anyway, I'm just showing you that. That's one of the property shares you should avoid. All right, now I'd like to talk about a share which is much more exciting, which is Kappa Tech. Kappa Tech has just come out with results. Obviously, they are the arch disruptor in the banking industry. They're taking business away from the big four banks at an incredible pace. They produced an amazing set of results for the 6 months to August 31st. Headline earnings per share were up 20%. They are increasing their client base at an incredible pace. They have 200,000 new accounts opened every month, and they are selling 90,000 funeral policies a month. This share is a must-have for any serious private investor. I just want to put quite a lot of data on the screen here. You can see that there's the initial rise in Kappa Tech, where it went up very strongly. Then there was a 26% correction, a further rise, a 28% correction, a further rise. Here comes the Viceroy report, came down to this, and there was a nice hammer candlestick there, and it rose up off this, and now it's had a correction, and it appears now to be recovering quite strongly from that correction. So obviously, it's a share that you've got to hold in your portfolio, I think, and you must be willing to watch it correct at least 25%. But if you buy it now, you're not buying it at the highest price it's been to, and we believe that this share will continue to perform extremely well. It's almost a must-have for all private investors. The next share I want to talk about is Spur Corporation. This obviously is a fast food outlet. Mostly, I just want to put a bit more data on the screen here. Right, you can see here that Spur has fallen quite a long way, together with all other retailers. But now there's quite a good island formation coming up here. Just going to put a lot more data on the screen. You can see what's the history of Spur now. It went through a massive head and shoulders formation. You can see there's the left shoulder, the head, the right shoulder. This here is the neckline. Broke down out of that, went down to actually about 20 Rand a share. And then in recent times, I'll just blow that up, you can see it's been forming an island here, an island formation, and now we've got an upside breakout over here. So what I'm saying to you is that maybe it's time to look at Spur. The one thing you know about it, it's trading at a very low price. A little while ago, it was trading well over 100 Rand. Now it's around 20 Rand a share, and we think that that's probably good value. The next share that I think is worth looking at is Aspen. Aspen is a huge, massive international pharmaceutical company. Going to put 5 years data on the screen here. You can see that Aspen made a high at 430 odd Rand, and that was in 2015. Since then, it came down quite strongly. There was support here at this level, as you can see. That support was broken over there. And when that support was broken, I put on a 65-day exponentially smooth moving average, which is this blue line that you can see here. And I just waited. And now you can see Aspen is starting to break out from that place. So technically, it looks very interesting. Aspen does business in 150 countries. They have a range of branded products for acute and chronic conditions. It sold its nutritional business and realized 12.3 billion from that, and then sold its infant nutrition business for 10.4 billion. But now, right at this moment, it's trading on a price-earnings ratio of less than 7. And that looks cheap to me for a big international rand hedge company. I know it's got debt, but they are doing something about that, as you can see from those sales. And what's interesting is that the CEO of this company and his deputy have recently bought 110 million rands worth of their own shares. To us, it looks cheap, and obviously they believe it's cheap as well. All right, let's talk about Brait. That's been much in the news recently. Obviously, this is a Christo Visa company, and it owns things like Virgin Active. I think it's got 72% of Virgin Active. It's got shares in Premier, in Consol. It's got an overseas company called New Look, which has been a disaster, and another company called Iceland Foods. Now, there's a move now to reorganize this company, and they call it Project Arbiter. And Christo Visa has been working with a company called Mergence in order to reorganize the company. Mergence has just acquired another 27.3 million shares from Christo Visa, taking their stake in the company in Brait up to 9% from 4%. Visa still holds 40% through his company Titan, but we think this could be an interesting company because it's breaking up through its long-term downward trend line, as you can see from what's on the screen. And maybe there's some upside potential once it's reorganized. Ladies and gentlemen, that concludes my confidential report for this month. And I hope that you found something of interest. Of course, the notes contain a great deal more than I've been able to talk about on this report. So I suggest you go and have a look at those notes, which will be posted on your website. Otherwise, I'll talk to you again in a month's time.